Alright. What's going on, family? Y'all can hear me loud and clear? Let me know in the chats if y'all guys can hear me loud and clear. Actually, let me change that setting. Now let me know if you guys can hear me loud and clear. What's going on? Hope everybody is good. I see you guys are already active in the chats. Love to see it. Let's get this thing started. I hope y'all are having a great weekend. Let's see. Alright, let's bring up the charts real quick. Actually, no, let's bring up the news real quick. Let's see who we got in the chats tonight, family. We got Cody out in North Carolina. What's going on, brother? We got Mr. Michael Bauman in the chats. We got Alex in the chat. What's going on? Alkins, what's going on, family? First off, as people kind of pile in, I do want to just give a quick shout out to all my fathers out there, right? Happy Father's Day to everybody. I hope you guys had an amazing weekend celebrating with either your fathers or with your kids, right? Or both, whichever side of that, spectrum you kind of land on. So shout out to all of you out there. Shout out to all my fathers. Hope you guys, again, had a fantastic weekend. And then even if you're not a father, I also hope you guys had a fantastic weekend. So guys, we are gonna get started here. I don't want to take up too much of everybody's time tonight, so as always, we're gonna jump into some weekly market outlooks. All right, we're gonna take a look at some of the weekly moves that we have coming up, and as always, guys, we're gonna start with the fundamentals. Right, we want to know what rumors, what big events are coming up this week that we can potentially capitalize on. All right, what all the big money, the smart money is going to be doing, what they're going to be playing into. So we always want to keep that stuff in our minds throughout the week, and there's no better day to be doing that other than Sunday. So I'm going to just filter out some of this news here. There's a lot of soft data this week, so we're just going to go into some of the high impact stuff, and as we kind of go through this, we'll see what we have. Let's see what we have. Shout out to Alex, my guy. Alright, so going over some of the news again for this week, guys, the big fundamental rumors, the stuff that we're looking forward to, starts out with some speeches from Lagarde, ECB president. We have all this kind of happening on Monday. We also have some RBA meeting minutes out of Australia. It actually seems like it's a pretty light week, to be honest. Starting out on Monday, I don't think Lagarde is going to say anything that we don't already specifically know, but he is speaking twice, once at 9 a.m. and then once at 11, so Euro traders beware. They obviously have some stuff they want to get out. We'll have to kind of dive into those speeches in, kind of live time. This is within our trading window, so we'll be paying attention to this Monday morning for sure. Coming into Tuesday, we got some Brazilian news. We're not really going to pay too much attention to that. And then out of Canada, we have core retail sales. This should be an interesting number. They are forecasting this to come out at 0.6%. This would be a 1.5 roughly percent decrease from the previous results. So they're expecting some bad retail sales numbers coming out of Canada. It's actually going to be interesting to see. As you guys may know, last week we had retail sales come out for the US dollar, for the US, and that was actually negative. That actually printed negative. It did not come out positive at all. So we're actually kind of seeing that kind of trickle over into some of the other countries as well. This is, again, due to the things we've been talking about on stream with inflation, cost of goods going up on both the producer and the consumer standpoint. So retail sales really have been taking a hit. It seems like this is the projected result, though. So a lot of people probably going to be playing into that early week, expecting that decrease in Canadian retail sales. I'd be interested to see if this actually comes out at 0.6 or if it actually dips into the negative territory, much like the US did. Existing home sales, expecting 5.39 to a previous 5.61. This is another number we expect to kind of slow down. The housing markets have been great the past 2 years. We are expecting them to have already hit their peak, so we do expect some of these numbers to begin to contract. Again, this is not really data that I'm going to be trading largely off of, but it is a part of the soft data or the softer data that comes out that institutions look for just across the board for macro moves. So we will see this begin to contract. We have a few people in the inner circle too that are also working in this field that have kind of confirmed to us that the housing market is beginning to slow. And with rates rising, right, that's to be expected. Getting loans and just money in general is becoming more expensive. So, again, this is stuff that we do expect to happen. On Wednesday, we have a CPI for the pound year over year. That's going to be their inflation numbers. It is expected to come out at 9.1%, which is just absolutely crazy. It did come out previously at 9, so they are expecting this to continue its, uptick. But guys, when we see CPI continuing to rise, there's a few things that we take into mind with that, right? The more inflation does begin to continue to rise in this area, right, in the pound, we are going to expect them to stay aggressive on the rate hikes. We expect them to continue to rise. They did just go to 1.25% interest rates last week. We should be able to see that on the side here. Where are they? The Bank of England, yep, 1.25%. So we do expect them to kind of keep up that rate hikes. We'll have to, pay attention to CPI here. If it does contract a little bit, maybe they just stick to these 0.25 basis point, these 25 basis point hikes that they've been doing. But if this, absolutely blows this 9.1% out of the water, kind of like what happened in the U.S. where they hit another record high, will fully expect them to continue to hike. But this is not new stuff, guys. This is stuff we've been talking about what's been now weeks with these inflation numbers. We do have core CPI coming out of Canada, and we also have Powell testifying again at Wednesday, 9:30 in the morning. This is probably going to be in conjunction with some of these other speeches coming up also on Thursday. Probably going to be what we're looking for in terms of volatility on things like NASDAQ, US 30, and just general dollar volatility. See if when Powell comes in here what he's got to say. But remember, they just also came out last week with the economic projections and stuff. There hasn't been any new data that has come out. So really don't expect them to drop any sort of bombshells on the market. They did a lot of that last week. Thursday, we got a few more things, more pound news, really. We got PMI coming out for them. Again, another number that we expect to continue to rise month over month, year over year. They are looking at 51.8 to come out on composite manufacturing PI, 54.6. So they are expecting the same results. Again, I would assume that these are either going to remain the same or continue higher. Contracting would be like kind of the riskier bet on the side of kind of trying to project that news. So this is all the good stuff that we got coming out this week. Again, we have initial jobless claims. There's an EU leader summit. Again, Powell testifying or speaking again on Thursday at 10 a.m. And then we kind of have nothing for the end of the week. So it actually is a pretty light week. I thought, however, think that we had GDP this week. Was I wrong? Or do they have this mislabeled? Let's just check real quick. No, I guess I was just wrong. Thursday. I could be wrong. It could be next week. I could be getting ahead of myself here real quick. 1 second. I'm going to just peek at next week too. No. Okay. Interesting. Oh, there it is. Okay. I was gonna say I knew GDP was coming up. Okay, so we actually have a whole week before GDP, which is gonna be real nice. All right. So we're gonna jump into some charts, family. I want to keep this stream pretty quick tonight. We're not really expecting again too much out of the fundamental side of things. The only thing we're really looking at is probably gonna be this GBP CPI number. As well as this Canadian retail sales, and then we'll probably also see what Powell has to say throughout the week. But But mostly for me, I'm going to be playing the pound, it seems like, a lot. I'll probably have my eyes on GJ. GJ also looks really good on the chart. So we'll probably keep an eye on that. Let's hop over real quick to some of the charts. We're going to go through my watch list real quick, and then I will let you guys, throw out one or two pairs. If you guys are in the inner circle, feel free to throw out as many as you want. You guys know I'll look at anything for you guys. Alright. That was me recording some video lessons. Alright, so NASDAQ, guys. NASDAQ has been very interesting. It's been continuing its, bearish decline that it had ever since those CPI numbers came out 2 weeks ago. And a few of you may know, again, if you guys were tuned into the channel last week, we actually were looking at end-in NASDAQ buys from this area. We had booked some partials up here, and then ultimately it actually broke us even on the remaining positions. At this point, I'm still not convinced we, continue to harshly sell off. We will probably continue to, trend to the downside, build some sort of accumulation cycle, maybe even a redistribution cycle. So this week on the NASDAQ, because again, it's not a big news week, and we're really not expecting much to happen until GDP, I'm probably going to just be playing the range, right? I'm probably going to just be playing between these two levels. I'm not going to expect it to break out, really off any sort of news. I do expect the market to cycle out into GDP. So my idea here is maybe we're looking at things like, maybe this was like an early range PS or PSY, however you want to label it, depending if you, expect accumulation or distribution. This maybe being a selling climax. There's no major volume down here, but that's quite okay. We can see if this kind of holds as a selling climax. Again, this is just a thought. We're just building an idea. If this is going to act as a PSY with this kind of equilibrium and volume down here, maybe this is our selling climax, and maybe we're range bound, right? I am building the case that we're going to be trading between the 11,000 and 11,700, which I understand is a pretty wide range, but it is what we're currently given. So maybe this kind of acts as like a selling climax now. Maybe we do push down here and get some climactic volume. That would be ideal. All right, I'm not going to, immediately bet on that on this 4-hour chart. So looking at this, I probably am going to look for reasons to maybe get back into these shorter term buys to see what happens back at this 11,700 level. Again, we've now pushed below these previous levels, and if we just look at the activity in the market, right, when we're creating these lows and when we're creating this low, it's vastly lower efforts. So for me, right, I have no problem kind of taking counter trend trades until, effort begins to kind of kick up. If I'm looking at real quick basic trades on like the 1 hour here, we're probably going to build up continued liquidity with inside of here. I'm going to just delete this line because it doesn't really mean anything to me on my charts. Alright, so it's possible that we kind of build up liquidity inside of this range here. And maybe by the morning time we kind of push lower into, 4-hour demand candles, 2-hour demand candles, and then maybe we can kind of continue for a buy. So my early week play on this is just to see if the, continued push that we're getting right now from this kind of supply over here that we kind of had previously marked out, just to see if this sell volume doesn't really uptick as we make this move down. I'm going to look for reasons to, trade against it back up to 11,700 and kind of come fill some of this supply up here, some of these wicks. We didn't really fully capture this move, so for me, I'm going to continue to trade into this direction. Another reason I'm going to continue trading into this direction is because we do have a really nice reversal order block down here, right, kind of sitting in our selling climax area. I'll be honest, we didn't specifically retest this candle fully yet, so maybe, again, this will act as like an area of interest. Maybe we fill this wick here in the morning, and then we kind of continue up. Again, these are all just ideas that I'm looking at for when I'm sitting down actually trading, right? We're not actually trading at this moment, so me building out ideas is just going off what I have and what we would like to see. So I would like to see something like that where we kind of push back down into this demand, again, on continued lower effort. Or if you understand volume and the way absorption works, we're going to look for an area, some absorption up in this area here. So if you guys understand what absorption is, again, that's going to be another thing you're going to want to be paying attention to on this type of structure. My setup will probably look something like this, ideally. Again, this is not really what we're fully expecting to get. I would like to hold in here, but if we do get that push into the order block, we're just looking for a very basic in the range trade, right? Playing the range lows on lower effort, and then kind of coming back up and capturing some of this, you know, additional supply, maybe even this supply here, or this little continuation order block. I know a few people like this kind of sell structure. For me, it's less about selling at this zone and more about using the zone as a TP for my buy. I would expect price to fade off here, but I'm not going to just immediately sell because it hits this area, right? I need actual data up in that zone to confirm that for me. So yeah, this looks pretty good. The only concern I have is like maybe we do, you know, retest just to here, you know, but we'll take that step by step, but add that to your, you know, awareness radar for if price does come back up here. Alright. Why is my live always behind? Okay. So yeah, that's what we're looking at the NASDAQ, guys. Again, it's a very light news week. I think ultimately what the path on this looks like. Right, ultimately what the path, like the longer term path up into GDP looks like. Because when GDP hits, it's going to be big. And if you know why GDP, not this week, but the following week is big, throw it in the chat for me, right? Let me know in the chat if you know why GDP coming up in a week and a half is going to be a very, very pivotal point for the US dollar and just the United States in general, right? So throw that in the chat if you guys do know. But my path again on this week up into GDP is probably going to be something like this, where we, you know, play up into these zones and then maybe on that news we push a little bit lower. Yeah, that's my overall bias, right? That's my looking right. Let's see if anybody knows. Let me see if anybody knows. All right, Alex said recession, right? Recession maybe officially. Yup. Officially gonna be in a recession with the next GDP results. It's about all but guaranteed, you know. For a lot of us, we're looking at it like it definitely 100% is guaranteed. We actually think we'll go further than a recession and into what's called a depression. But if I just bring back the news real quick, if I just bring back next week's news to kind of show you guys. So on Wednesday, right, they're forecasting a 7.1% GDP. Are they serious? Is this Q1 GDP again? Oh, this is the final result? Okay, I was about to say. Yeah, so we're still getting quarter one. So scratch that. This is actually continued quarter one. It's so weird they're forecasting 7.1% though. They must be... This must be like a placeholder number. There's no way they're forecasting changing GDP to 7.1%. There's no way. Yeah, there's no way that's accurate. Yeah, so we're actually getting a final GDP for Q1. So scratch that. It's not Q2 GDP. Yeah, we're still in June, aren't we? Yeah. So we're wrapping that up still. But I'm curious why this says 7.1%. That's gotta be a placeholder number. There's no way they're forecasting this to come up 8%. They would have to be on drugs. They'd have to be smoking something, family. There ain't no way. So again, with GDP numbers, again, coming out later, about a week and a half away, what happens if it comes out at 7%? What happens if it comes out in 7%? You're gonna see a lot of markets recover. Yeah, no, there's no way it comes out at 7.1%. I mean, I'll eat my words if it does, but jumping from negative 1.3% or 1.4% to 7.1%, no, you'd have to have, no, that would mean the data was so off to begin with. If it does come out at 7%, expect massive bullish candles in indices and probably bearish candles out of the dollar for that matter. But that's not what it's going to come out at. It's probably going to come out at the same negative 1.4%, 1.5%. All right, don't expect some sort of crazy 8% adjustment on GDP. I definitely would not expect that with core retail sales and everything else dropping. That's so unrealistic. But this is the pathway for NAS 100, guys. That is what we see. We've been waiting on these quarter two numbers forever. I thought we were getting the early quarter two numbers, but I guess not. So let's take a look at gold, guys. Gold is interesting for sure. We kind of kept talking about last week how, again, we are bearish side on gold. In terms of just like the weekly outlook, the daily outlook, we are looking to continue to the downside. Last week's candle did close as another kind of bearish engulfing. A lot of this had to do with the interest rate hike that we talked about last Sunday. Last Sunday, when price was up here, we talked about how it would probably retest up. Didn't really give us that retest up, but we talked about how it was going to come down, erase the CPI move. All right, kind of come into these lower liquidity areas. And then if you were on Wednesday's call, we were actually looking to re-enter shorts up into this 1860 area. Now, I'll be real with you, family. The past week, 2 weeks, a lot of my trades just have not been pulling back into my alerts, into my sell zones. A lot of them are like just barely missing, you know, my entry zones. And because of that, I haven't really taken too much. I've really only taken 3 trades last week. We took an Ethereum trade over the weekend, which we'll get into later. But we really haven't been taking much, and a lot of that's just because the analysis, you know, although correct, is not pulling back exactly where we kind of pull it back with, and we just haven't been chasing the market. We haven't been like readjusting and trying to, you know, force anything. We've just been sticking to those original biases. So yeah, we were looking at it coming up into this 1860 area. I still do believe we have a chance to come up here. I'm not fully convinced. You know, this is basically the high for the week. That's all stuff that we already executed off. Let me just clean that up real quick. Right, I'm not fully convinced that this is going to be the high. Again, we have a real nice kind of engulfing pattern, and if you guys want to trade this as an order block, I know some people will. You know, you would expect at least kind of a pushback back up into this area here, into the actual OB, right? And again, we have the daily here. Right, there's a few things that kind of work with us, at least to kind of get a pullback back above this area. Now, again, another thing that happened is even though it missed our area, it did form, you know, climactic order block structure, which, as you guys know, is ideal for us, right? So we would have began taking entries after it kind of pushed up in here, and then what to do again, it forms another 4-hour, you know, OB or continuation OB off that structure. So this might have everything it needs to push down, right? I'm looking at it just from a logical standpoint. It really does have everything it needs. But I'm still going to remain patient and see if, you know, some sort of reaction off this lower demand here gives me a nice enough bounce where we get this, and we kind of liquidate this, and then we get our, you know, sell idea based off of that. So I'm going to remain patient, right? I'm going to remain patient. I think we can still snag this in the 1860 area. I will, however, be paying attention if we liquidate this level right here. If we do push up into the 55s, it'll be on our radar. But I really, really want this like 1861, 1862, you know, level here. I really want between these two continuation blocks. Right, so I'm gonna try to remain patient. Again, looking at some of these lower time frames, right, the case for this already having the structure that it needs is pretty high though. Again, this is another really strong area capturing liquidity right above this, forming very obvious supply. You know, it's very possible that all we get is an 1850. But keep this on your watch list either way, right? If you guys know me too, right? I will trade my idea multiple times, right, until it gets invalidated. So for me, this is not really invalidated until we push above this level. So I will take multiple trades as long as we remain under this level, right? So, you know, I might take an L on this, right? Not even gonna lie to you guys. We might execute in an environment that looks like this, right? If this comes up and it forms a signal for us to enter up there, right, and come down and again fill some of this, you know, lower demand here, all these unfilled wicks, right? If we take this, right, we might take an L on it, right? It might do something where, yeah, it pushes up and then it comes down and then it comes back up and it liquidates us and it forms more structure, right? The markets are fluid like that. You know, we might break even. Who knows what might happen up in this zone? We have to, again, do that in real time. That's why we talk about execution over analysis. We can do this analysis all day long, but it's all about how we execute in these areas and manage the trade, which ultimately, you know, decides our fate. So if you guys do execute off something like this, don't be scared to re-execute, again, based off of logic, right? There has to be logic associated with the trade up here. But don't be surprised if it plays off one of these levels or a few of these levels all throughout the week. Again, I'm going to do my best, though, to remain patient on this 1862 level, because that is where I would be most comfortable risking, you know, 0.5%, 1%, maybe even get a little aggressive and trade, you know, with a 1.5% risk, because we were a little bit light last week. But yeah, that's my overall outlook on gold. Again, we are expecting gold to take out this low this week at the 1805 and maybe eventually taking out this low at the 1786 area, because it's coming sooner rather than later. We have a nice little gap on the fundamentals to really kind of bring this down. Alright, what do we got up next on our watch list? Somebody said UJ, right? Jude, you said UJ? We could take a look at UJ real quick. Alright, so UJ, another one that's just following our analysis beautifully, right? So good, so good, so good. To give you guys a little bit of an update, if you're new to the stream and you're not sure what you're looking at here, basically what we were monitoring was a period of distribution, right? We're kind of monitoring it ever since it was, you know, forming over here. So all of this is, you know, was priorly done, this blue line where it starts, as you guys see me drawing on these sessions, right? When I draw a prediction, it's always from current price, right? So that's kind of where we started that idea. But we're looking at this from a distribution case, which, if you're unfamiliar with, you know, the term distribution, it basically just means incoming sells. It means that the market is becoming to get oversupplied, right? Supply is beginning to overtake demand, and prices will kind of tumble until it finds demand. So this is a beautiful little distribution, a rising distribution. We talked about how this looked like, you know, the same distribution as that kind of formed on Bitcoin. And this thing played out beautifully. We talked about how it's going to come down to the, you know, 130 to 30 area, possibly even liquidating that. And ideally, we wanted to see it tap like into the lower 131s. It did just miss, you know, the line we were looking at, but it definitely came down into the zone, broke the 132. That was the big idea here. If you were also a part of my Instagram live, you might have caught the idea that we were looking for shorts up here, which is ultimately the last move that it had. Now, I want to talk about UJ a little bit because UJ did recover this sell-off very quickly, right? Very quickly kind of came back and recovered this, right? So a lot of what you're seeing here goes back to the fundamentals that we look at the beginning of the week, right? We know that, again, because of interest rates, the dollar, which has a 1.75% interest rate, and the yen, which is sitting at, I think, like negative, I want to say negative 0.25, but that could be a negative 0.75. Either way, they have negative rates. The US dollar is very much more appealing because you are actually earning, with that type of kind of, long-term macro hold. I guess I know a lot of people on here, your savings account numbers don't get adjusted. That's not what we're talking about. We're talking about the smart money side of things on lending and borrowing. All right, they're actually earning a higher interest rate than they would be holding the yen, whereas they're basically paying to hold that currency. So although, yeah, the yen did see some demand, ultimately because of the fundamentals and the interest rate differential, this did completely erase the move. Now, if you ask me what's next for this, when I take a look at this, there's a few things that kind of concern me about continuing to trade this to the upside. Now, it probably will continue to trend to the upside, but I want to kind of open everyone's eyes to an idea that maybe this range here, this distribution, is going to act as a future long-term PSY. Right, so what I'm actually seeing on like this 4 hours, we're starting to see like a little bit of effort divergence. Right, if you look at the rise that we had when we erased the move, although quick and strong, the buying effort here is finally kind of beginning to dry up. Now, it is more than it was all throughout the distribution, but we are starting to see a little bit of a shift in the buying and selling. Now, what I would really need for this to kind of confirm is another high effort sell, but I don't believe we get that until we kind of push higher. Because again, I do think this is higher time frame, early warning stuff. Again, if this is a daily PSY, you're still looking at a range that can do something like where it climaxes out, then does its AR, then does its ST, then enters very. So you're expecting a wider range on the daily time frame. So it's just really like a multi-week in advance kind of a heads up that the dollar might be starting to kind of, tip away from being as bullish as it's been. And I do want to talk to you guys about some fundamentals that are kind of going to back this. Again, this is the type of rumor analysis that I like to do, right? I like to see early warnings and then start to kind of build an idea before anybody even, else even sees it coming. And again, you could see the early warnings here, right? It's all based in volume and logic. But some of the interest rate stuff might be, again, unless you deal in rumors like I do, it might be a little confusing. It might be like, how can you see this coming? What are the signs? I'm gonna break it down for you guys, right? Again, from a technical aspect, I do think this will eventually come up and clear this UT, because it does have to form some sort of a buying climax. But what we see here, we're going to proceed with caution. Now, what I want to do is I want to just switch back to this real quick. And I want to come down to these central bank rates. Can I open this up? No? Okay. Well, listen, look. Okay, there we go. Right, so let's take a look at this. Let's take a look at this and why I want to talk about why I think the dollar is going to not continue to be the strongest currency. And again, this is why I tell you guys, I'm not trading currencies because of this environment we're going into. So the Fed, right? Let's talk about this. First off, let's just look at all the rates, right? The USD is at 1.75, the ECB is at 0%, the Bank of England is at 1.25, the Swiss National Bank at negative 0.25%. Now, this is actually where some of my bias for the dollar losing its upcoming strength is coming from. The Swiss National Bank used to have rates at negative 0.75, which means they did a 50 basis point hike and they started to head out of the negative territory. Right? That's the first time they've done that in a very long time. They're looking to kind of head into the positive territory. Right? This is going to be a big deal going forward. The Reserve Bank of Australia, very modest at 0.85%. They've been taking it pretty slow as well. Bank of Canada, 1.5%. New Zealand up at 2%. This is actually leading the Fed. Again, Bank of Japan, which is at negative 0.10%. Excuse me, earlier on not having that data. It's been a while since I've actually checked what they were at approximately. But they're at negative 0.10%. And then we have places like, Russia, which for very specific reasons have to have a high interest rate to make their, they're out there doing things that people don't necessarily agree with. And we have India, China, and Brazil, which are not really going to be factors here, right? So the Fed has been leading the way with hikes, right? They've been doing the most consistent and longest kind of hikes out of a majority of these currencies, right? They've been leading the way. They were doing 50 basis point hikes. They did another 50 basis point hike. We're doing 75 basis point hikes now. And although that sounds great, right, and the Fed did their highest rate hike since like 1994, right, breaking through that 0.75% kind of barrier. That's all great, but some of these other countries are beginning to play what's called like the catch-up game, right? And some of them are going to become so aggressive that they're actually going to push harder than the USD. So although the US dollar was the first one to kind of kickstart these consistent rate hikes, and they're even trying to push the ground by doing a 0.75, you're going to see some of these other ones begin to do 50 basis points, 75 basis points. Some of them are even going to do 100 basis point hikes, right? The ECB, for the first time in a very long time, is looking to also increase their hikes. They're going to be doing one their next meeting. They said this. We know this. They're not going to be 0% rates going forward, right? So this is going to give some attraction to other currencies, whereas before there was no attraction because most of them were not hiking, and the US dollar was the only one hiking. Now that everybody's on this path, everybody has to begin to combat inflation, and not everybody is going to play this conservatively, right? Some of these interest rate hikes are going to get more aggressive. They're going to, outdo what the Federal Reserve is doing. The Federal Reserve might even be at a point where they do one more 75 basis point hike, and then if inflation starts to contract, they might slow down a bit while these other countries begin to get more aggressive, right? So when that happens, the money flow kind of begins to shift, right? If we just go real quick back to the charts, we see how, if we just go to the dollar index, we just want an overall look at the dollar, right? We see how aggressive this has been, since they began, increasing the rates. Now that other countries are joining the party, it's going to take away from some of that money flow as money begins to flow back into the ECB, the Eurozone, as things start to go back into the Swiss franc, the Japanese yen. If those currencies go back from negative to positive, they're going to become more appealing. Remember, those are safe haven currencies. The only reason the yen has been so weak is because it hasn't been acting as a safe haven, because who's going to put their money in a safe haven asset that is constantly giving them negative interest? Nobody, as we can see. So again, I do believe these are like early PSY warnings where you get a buying climax, and then this is kind of just going to be more range bound. And I think your better opportunities are going to come from the Eurozone, the pound, the New Zealand dollar. If the Swiss franc and the yen continue to, well, the yen has yet to start, but if it does start and they start doing 50 basis point hikes, 100 basis point hikes, which their banks are known to have done in the past, right, you're going to see some nice corrective moves on things like UJ that a lot of people are just not going to see coming, because they're just going to be buying into that dollar hype, dollar hype, dollar hype. So we want to get ahead of this. Again, this is real macro stuff. This is multiple weeks out, right? Banks have to consume data. They have to have meetings. They have to go through one hike before they can get to the second. But I'm telling you guys, going into the end of summer, into the holidays, into the fall, you will see less dollar strength and more strength out of the cross currencies and other majors. Right? So listen, that's what I see, right? That's what I see. That's how I see the money flow happening. This is where we make a majority of our money, is by, projecting these longer term kind of shifts. So for you dollar bulls, I'm telling you, some of your opportunity might be in, future EU longs at new lows. Again, a lot of this stuff is look at this weekly. Right, look at the sell volume here, right? Look at all this higher effort that's not bringing us any lower, right? Here's your PSY, selling climax, STAR, right? You're gonna build a range, right? That's gonna favor the euro in the future as they begin those hikes. So again, you heard it here first. I haven't heard anybody else talking about this stuff. I know everybody I know is dollar, dollar, dollar. Again, I'm still a dollar bull, but I see the early warnings. So I'm just throwing that out there. Just throwing that out there. Does that make sense, by the way? Does that make sense, guys? Because I'm telling you, UJ really has a potential to, again, it has to cycle out, but come back for this 126 area after it does that. But let me know if you guys think I'm crazy, if you guys see it too. Right, let me know your guys' thoughts about what I just kind of ranted on about. Does it make sense? I hope it makes sense to you guys. It is very common though that I am seen as the crazy person until it happens. So Jude likes the idea. Love to see it, love to see it, love to see it. That being said, I mean, Euro USD, guys, if we do take a look at this, again, we kind of talked about this on Wednesday. We talked about it on, we didn't talk about it on Sunday, but we did talk about it on Wednesday, how EU has kind of formed an accumulation. We were expecting this to be the spring. Stuff worked out perfectly and has moved out of the range. At this point, I'm going to be honest, I kind of really have to see what it does, again, near these highs. It is possible that this range has ran its course. If we just take our trend-based fib extensions here, yeah, we've hit the 161.8. So for me, like, this trade idea is kind of already done. And I'll be real, because I'm expecting the NASDAQ to kind of continue higher. I would expect the same thing out of here. So I'll be interested to see what kind of happens up at this order block territory here. Again, this is, you know, a very obvious climactic order block for us. Right, so I would be interested to see what happens up here. I do think we break through here, though. I do think we break through here. The big question is, right, if this is the accumulation, right, if this was our spring and this was our test, then what is this, guys? What is this? Right? First off, what is this? Type what that is, and then type what this is. Right, what do we call this typically? If the accum is real, right? If the accum is real, what do we call the first little breakout here? I can see Euro USD going up. Yeah, I mean, the accumulation is clear. It might have ran its course, though. It is possible. Right, I know we're on a little bit of delay, so we're going to put that down, right? SOS, sign of strength, right? Is this our sign of strength? And then is this our LPSY, right? Is this our last point of support, which would not include a Y, which would be our LPS. Right, we also have a little bit of compression going on here against these highs. We're kind of breaking that now. What I would be looking for on this week, I mean, the open kind of tested this already. Yeah, I mean, at this point, honestly, the best price on this was probably the Sunday open, because we're already kind of pushing above here. So for me at this point on EU, I need to see what it does when it comes up here. I need to see what it does after it captures this liquidity and tests this block. I'm looking at this again. I would want to see compression here. Change a character? Nah, we have to change a character here. That would be a sign of strength. Yeah, this would be your sign of strength. Unfortunately, the volume doesn't necessarily support it. I know. If you have the course, I understand. Trust me. That's also why we're monitoring what's going to happen up here. But it would be typically your sign of strength back into your LPS. Now for me though, I do want to see what happens when it comes back up to this level. I think what we're going to do is we're going to compress, right? Realistically, that's what we would want. And if you don't know what compression is when you test the same supply level and then create higher lows into that same supply, and then eventually you kind of break out to the upside. That's what we, again, idealistically would want to see. We've seen cases of this before, more commonly in GJ. Right, so same thing here. Right, where you kind of have this recovery. You know, this is more or less where you are on EU. And then again, it keeps trading, you know, into that same supply until eventually it breaks out higher, right? So that's kind of what we're looking on EU. I think that's, you know, the easiest, obvious, you know, to the right cycle that we have. Still think we're kind of early. I wouldn't want to execute now. I want to execute after we kind of push up, hit this order block, and then see the reaction from here. Once we start to see the absorption, then we can play this idea of the compression kind of up into some of these higher supplies. So I think EU has a real nice chance to come up to the 107.20 area. So I'm looking for 107.20 on EU. I will invalidate this entire idea if we do break this low, specifically on higher sell volume. But until we get that, this is going to be a compression play all week. And again, we usually when we're entering compression, we'll do one of two things. We'll either take the really low risk in terms of pip trade at the end of the compression, or we'll try to snag the first pullback after the second test, and we'll try to play this higher low in hopes that we could hold it all week. And then once the compression comes out, then we get that nice pay move. So we'll trade it one of two ways. We'll probably try trading it both ways, if not maybe 3 times, depending on how many times it wants to compress. But this seems like the very easy, obvious move for me on Euro USD. GU probably going to be similar. Again, we never got to the... This is just another example of me not getting what I want out of the market. This doesn't look as nice, to be honest with you. Yeah, this doesn't look as nice. We also have a lot of pound news this week with, I mean, what did they have? They had CPI, they had PMI. They have a lot of news this week. So this might actually be a little weaker than Euro USD this week, to be quite honest with you. Wait, what did they have? They had, yeah, they have CPI, PMI. Yeah, they have CPI, PMI, and retail sales. All probably not going to come out great. Because of the data on this, I want to see if it fills this wick. I'd be interested to see if it fills this wick. This might fall off a little bit of a cliff before it comes up for the compression. So I'm gonna stay on the sidelines on the pound until some of that data comes out. If CPI does come out higher, and we get any sort of pullback into this wick, then I'm going to take my buys because I know that the pound will have to respond to that with higher interest rates. And if they respond to that with higher interest rates, that's going to push them closer to that 1.75, so more on par with the US dollar. But I'm going to remain cautious on this because this wick, like, this is very classic. Again, the same thing. Look, the same thing that we expect out of gold, right? When you have this kind of like really ugly move and you have all these kind of wicks below it, right? 9 out of 10 times it comes and it fills it. So I think that's actually what we're looking at on the pound. That actually might make me reverse what I'm looking for on EU. But I'd rather trade the pound with the news. But I think the path for the pound, guys, is just very simply going to be like this. And then maybe we can kind of take it back up to the highs here. So my trade for the week is going to be looking for longs back down to like this area. stops below those wicks. I'm looking at the move back up. Because I really don't expect their CPI or PMI to come out great. Their retail sales probably not going to come out great. I don't think it was even forecasted to come out great. So this is like the path that I'm looking at on GU. I am looking at a liquidation of 102.40. And then pending what the volume looks like down here, definitely taking that for a buy. So we might, maybe it is possible we play into this order block here. Maybe it is possible that that EU does something a little different. Maybe she plays off that down and then up. Again, it's all we can build plans all the time. Just because one does one thing doesn't mean anything. So we're gonna put my compression idea back here. They don't need to do the same thing. Euro GBP. Yeah, and this looks bullish as all hell too. Look at this. Look at the perfect, again, more examples of that same compression we're looking for on EU. Right, the push down, test up, test up, test up, and eventually the compression breaks. Very classic stuff. I think we talked about this on Wednesday too. I couldn't tell you where we talked about this, but we did talk about how, again, this was going to break the high because of the compression. So it's possible that Euro GBP does trade like this, which will give us exactly what we want out of GU, and possibly the same thing out of EU. So yeah, this looks real good. I'm gonna rock with this idea all week. That GU is gonna come down to below the 120 or around to the 120, and EU will remain range bound until she's ready to make that move based off the compression. So what haven't we looked at yet? The only thing we're missing is crypto. Little crypto. Take a little look-see. So we're actually in a buy on this, guys. We are actually in a buy on Ethereum. Basically, we bought yesterday after it made. Was it yesterday? It was, yeah, yesterday or Friday. I think it was a Friday trading day. But once we started this move down here, we began to take buys. A lot of this was not based off higher time frame charts. A lot of this was based on the actual fundamentals and liquidations of a few hedge funds, 3 Arrow Club specifically. So we kind of talked about how, yeah, there was buying activity coming into Ethereum, but I wasn't confident in buying or trading this yet, purely because we still had 3 Arrow Club liquidations on the deck, right? We knew that there were funds out there that, if Ethereum dropped any lower, would be forced to liquidate positions, etc., etc. So when that liquidation did happen, we began to play lower time frame charts after demand began to come in. So if you are in the inner circle, most of you, again, that are not trading on prop firm accounts and couldn't enter on Saturday, I know somebody said that, that does feel bad. That's why we always talk about you have to have your own accounts too. But we are along from the 933, 950 areas on Ethereum. We've been long, again, since the weekend. We took some trades, right after it made this move. Basically, after this move came in, basically told me that the market liquidations have now begun to happen, right? The buying activities, take profits were hitting, right? Basically, the peak low was already formed. We were also looking at the 1 hour time frame. And again, we talk about, order blocks from, hold on. Am I sharing the rights? I am, okay. We talk about how an order block for us has to be at the climax. So when I saw this beginning to engulf, I was like, listen, like, if this closes like this, we have to get in. And as I said that, we got this candle, and I really wrote it in the chat. I was like, listen, like, we might have to play the live OB retest. And then this candle came out of nowhere, and I was like, okay, well, wow, this thing just jumped 40 bucks. We have to get in on the next 5-minute pullback, which literally happened on the next candle, right? And I know some people didn't enter because people, you know, want those perfect retests and stuff. But right after I saw this kind of spike up, I was trading this all day long with my stop losses right below these lows. Because again, I was looking at that as being a protected price action. So one bearish candle came in, we began taking positions. Again, on a lower time frame, guys. If you just look at this on the 1 minute, it's the same thing that I show you guys. Where is it? Right, this is literally compression. Right, look, it's literally compression. Right, here's your highs. Right, test into the high, higher low, higher low, higher low until it breaks. Right, so I was monitoring that the entire time. We were just looking at it from, again, a compression standpoint. So beautiful, beautiful trades. I officially sent the signal a little bit later, right? It kind of came up, and then as it came down, I sent the official signal, which is, you know, long positions in this area. Stop loss at 880. Right, because we're talking about protected price action. We would have taken more buys had it pushed lower. And we're actually looking at this retesting about 1300. So this is a trade that we are in. You know, it's like a 1 to 6, which is a pretty beautiful trade. It has been working well for us. Right now it has us as a, you know, 1 to 6.7, as high as a 1.3. I don't think anybody scaled anything out. I personally haven't scaled anything out. I'm trying to get that 1300 retest. Yeah, and now we're kind of just retesting down. So a few things about the retest down. I know this is a little scary for some people that are probably in it with me down here, but just understand if our trade idea is going to work, then we should hold our entries, right? There should be no reason that it comes back down here. Now the reasons for this pullback are very obvious, right? We have the brand new weekly candle, right? Brand new weekly candle filling out some of this wick. This is stuff that we expect. Brand new daily candle retesting. And again, we have, again, climactic order block structure. We talk about this when we have order blocks. They have to happen at some sort of a climax low. They have to be the low candle. So at this point, again, this closed very nice. New daily candle opens, retesting into the OB. I know some people like to use the 50%. We haven't quite hit the 50% yet. But we have begun to kind of retest into it. And just like we played, right, just like we played the 4-hour, right, just like we played down here the same way, right, we took it as it began to come into here. It's the same idea, guys. It's the same move over and over. We literally take the same trade 100 different times. It's never any different. It always looks the same. It's honestly quite boring. But it's exactly what we're looking for in the daily. Now, a lot of you guys are asking about re-entries. Why do we need re-entries? Right? I mean, I didn't close anything. If you guys closed it, then yeah, you guys need a re-entry. But let's not get greedy, right? Let's not get greedy. The market, again, is very much pushing to the downside. We're trying to trade what's called, again, what we call protected price action. So for me, it's not worth continually adding on, because if we add on here and we take a loss and our other trades break even, then we just turned a winner into a loser, and we don't want to do that. There's no reason for us to do that. So again, I'm not looking to add on. I'm not looking to do anything like that. I'm just looking to continue to hold our already perfectly and beautifully executed trades. Right? This is the problem with a lot of people. A lot of people, they get really nice trades and then they mess it up by continuing to try to add to it. If we want to add to this trade, we'll do so when logic dictates it. Right? If it does kind of come up, clears this, then comes back for a deeper retest and is a little safer, we've already taken some money out of the market, yeah, then we can maybe look for re-entries. But there's no reason to add risk to a trade we haven't pulled any money from yet. If we had closed some of our trade up here, yeah, then we could say, okay, we'll buy back some of it cheaper, but that's not our case. So again, if you guys are taking re-entries, do it on your own merit. It's not on mine. We are going to continue this 930 now at 950. Now, a lot of you that are looking at this are probably like, okay, well, you know, Skag's going to buy from 930, not 950 area. He says it's going to 1400. You know, that must mean the low is in. That's not necessarily what we're saying. In the macro terms of things, we absolutely do not believe the low is in. All right, we still have over 2 years to the Bitcoin halving. We will continue to see, sideways and downwards movement as it kind of, accumulates out. We still have to have spring lows. It's very, very early in any sort of accumulation cycle that you may or may not be expecting in this area. So to understand that, again, we're looking for short-term relief bounces because there were people that did get liquidated down here. There's been a ton of leverage, ton of people that got liquidated on this, and it's just something that we're playing the effect of. All right, so our path again looks something like this, and then we'll probably draw out, longer ranges, right? So that is our plan on cryptos. If you guys are in this trade with me, shout out to you guys. Let's see what we got. Top tier lets you trade on the weekends. Yeah, so some will. Somebody actually asked me on Instagram what prop firms allow you to trade on the weekends. I will let you guys know, in terms of prop firms, a lot of them have a rule saying that you can't hold over the weekend, right? FTMO is the same way. MFF, depending on the account type you have too, some of them do allow weekend holds and whatnot. But the real rule, because I've asked this, right, about like crypto on the weekends with FTMO, and this is only specific to FTMO because I haven't talked to the other prop firms. But FTMO will only fail your accounts if you hold when the market is closed for longer than 2 hours. Right, so when the daily rollover happens on indices and stuff, that's a 1 hour close. With crypto, there is a point in the weekend where basically that is like it's past that. So it closes at Friday at 5 or whatever it is. Then it typically opens back up again like 2, 3, 4 hours later. And then it closes again on Saturday from like 11 a.m. to like 8 p.m. So you basically have to wait until Saturday at 8 p.m. and then you can begin to trade crypto. Oh, excuse me, guys. On FTMO. So there is a way to do it. You just have to. Oh, excuse me. You guys do just have to, check with your brokers, find out when that safe trading time is. Don't just take my word for it. Make sure you ask them. But you could have still capitalized on this idea if you were playing with inside that window. Oh, man. All right. Any other questions? Any other pairs? Any other pairs, family? Taking requests. Requests are officially open. Yeah, Johnny says, yeah, I haven't scaled out either. Only one break even. Yeah, I feel you, bro. I'm the same way. There's no reason to put out additional risk. Jude, you love EuroCAD, don't you? You always asking for EuroCAD. Again, this is more stuff we talked about, right? Again, I've been talking about this accumulation for a while now. We did not go over oil. I will go over oil. Thank you for reminding me. Look at Tesla since you won't look at TQQQ. I don't know why you're so concerned with those, but we'll look at Tesla. I don't like looking at Tesla because I own Tesla. I'm not trying to see what price it's. I'm really not trying to find out what price it's trading at. So again, guys, we have EuroCAD here again. Sign of strength, LPS. This cycle is playing out at this point. This is what's considered a BU LPS. Again, refer to your Wyckoff schematics for that. This is more than likely going to continue its play from the accumulation. We also talked about how it had like a 4-hour accumulation. So the idea now is, does it form another sign of strength above this area, right? Does it just reaccumulate here and then come up for the sign of strength? So at this point, EuroCAD is kind of like getting to the territory where we wouldn't really be playing this accumulation anymore because you should have been playing it here or here. So at this point, there's really not much you can try to take that's within, you know, my execution parameters. You'd have to really try to play this little reaccumulation, right? You have to try to really play this little reaccumulation, to see if, again, you want to push for those higher targets. For me, though, the only way I would be executing inside of this is if, one, we pushed above this wick, so I would need to see us above here, and then I would want us to spring the range, and then I would take the trade. And I want to see a sign of strength and come back for a spring into like this old demand. So you'd be looking at like something like that. Yeah, right, kind of into like this early lone candle. The problem with this is there's like a lot of inefficiency down here, so you really kind of want to be careful getting any price kind of that low. But after it makes, again, you guys know what we look for if you've been through the course, if you're in the inner circle, you guys know what we look for down here. We call it a live OB, right? You want to see the lower effort from the volume. You guys know the confirmations you need. They're all in the course. You guys can go get them. All right, I know the people that are asking for the EuroCAD analysis have this information, so I don't need to go deep into it. But you would want to play this little reaccumulation cycle. There's not really much to say about EuroCAD. It's been literally following exactly what we've marked out, you know, for the past 2 weeks. You know, Jude, you keep asking, and we, you know, we keep building the case for accumulation, and I hope you see it. I hope you see how it's reacting. But yeah, I would look at the 136.05 area to see if I can kind of snipe another entry. We trying to buy the breakout? Yes, I mean, listen, like, Drew, I'll be honest with you, we don't, that's not how we trade. That's not how I trade. I don't buy breakouts. That's not how we act. I'm a phase C, phase D trader, and this is phase C, this is phase D. So for me, like, I'm not really executing up here. I would throw this trade idea right out the window. I would have already missed the accum. So for me, like, I'm not chasing any sort of breakout. That's not how I trade. That's not how I do things. You know, you guys are always welcome to trade how you want. I'm not saying the trade idea wouldn't work, but if you kind of just break that down too, like, what are you gonna run on your stop? Like, you know, you break out here, and then what are you doing? You're just playing minor structure? Like, you're gonna get liquidated on that. That's not gonna hold long term. So for me, that's not really worth it. But again, everybody has their kind of parameters. But if I was gonna set up a position on this, it would be off a live play here. I wouldn't be risking much lower than the bottom of the range, and then I would be looking for that continuation. So again, you could play it however you want to see fit. The accumulation is clear, but you're joining the market at a point where, you know, the smart money's not playing as aggressive up there. All right, let's look at Tesla. Let's go look at how much of my net worth in Tesla is gone. Yeah, I mean, look, there's nothing to say about this, bro. We're still waiting for below 551. Yeah, bro, there ain't nothing to say about this. This is again like US 30 and the Nasdaq. It might get a little bit of a pullback, but ultimately it's gonna redistribute out and come take these lows. But this might pump to like 850. It might pump to like 750. I'm not even gonna spend too much time on this, bro. Like, the reason I don't look at individual stocks and TQQQ is like, why am I looking at this stuff when I look at the Nasdaq every day? Like, why am I looking at this stuff when I have the Nasdaq? There's no reason. Like, tells me nothing different that the Nasdaq doesn't already tell me. This is just not, like, I don't know. It's the same chart. It looks no different. It's all the same. So this is why I always kind of ignore this. There's no reason. Again, like, I'm in Tesla from down here. My average price is like 35. I'm literally not concerned about what this thing does. But if you wanted to set up on Tesla, it's gonna just follow the Nasdaq. This is all gonna flow together. Right? You're just gonna wait for this supply to get retested, and again, because of the state of the market, it's gonna come and grab all this liquidity, but below 530. Like, I don't even need to do any of that. Like, this is the analysis is already here. This is how long we've been waiting on this. This has been abundantly clear for so long. So yeah, bro, I really got nothing to say about this. Again, we trade the Nasdaq for a reason. We trade the NASDAQ for a reason. Whatever I'm doing on the NASDAQ, just apply to that. Oil. Another one that got away from us, man. Another one that got away from us. So again, guys, this is another, like UJ, another very obvious distribution cycle. Again, you guys can see it on the chart here. We were expecting this to pull back, capture some of this liquidity, and then tumble. Did it do that? It did it. It just didn't grab liquidity. So it came up, surprisingly played right into like these OBs. I mean, not like really, like not even. At this point, I still just see further downside for oil. I do finally see some relief in this market. Much like gold, the same reason we're bearish on gold is I think a lot of the macroeconomic fears that were driving this market are gone. Like, yeah, Russia and Ukraine is still an issue, but really the only way this thing is going parabolic again is if the China and Taiwan issue gets crazy. If that issue gets crazy, yeah, we might see some like geopolitical risk here. But a lot of this is just screaming further downside. We have not grabbed the 105 area. You know, this daily OB held pretty well. You know, it's a shame that we didn't get our entries up here. But yeah, man, I see oil very easily tumbling back down, even below this point. Like, I would expect this to get liquidated, but definitely back below the 100 levels. A few of you guys know that we've been looking at like the high 80s, right, on the weekly, kind of coming back and grabbing all of this, you know, war volatility, all of this other nonsense, right? All of this just crazy liquidity that happened up here. A lot of volume. Again, the market already has all of that Russia-Ukraine stuff priced in. At this point, I do think the market is ready to come back down, back to its, you know, respectable average price, which is about that $85 a barrel price. So if I was going to try to trade this week, like with that in mind, man, I don't even really see anything I'd want to play. Yeah, buyers can't even remotely take control over here, huh? Yeah, I mean, I would probably keep it simple. I mean, it's probably going to push just above here, but I would probably look to trade in some of this inefficiency. Unfortunately, I hate to take trades inside of inefficiency, so I would probably like to see it actually hold here. But this is probably like a really easy case of if this pulls back low volume, because, I mean, even this rise is like critically low volume. If you can even get like high enough between these structure points, I would look at, yeah, continuing this to the downside into, you know, these wicks, this, you know, little demand candle over here, into this, or this is actually an order block, it's a climax low. So this has a very high chance of just very easily trading into the 100 level flat. You might not even get that pullback. You literally might not even get that. It might just by the morning kind of just already be liquidating that. So again, this is another really unfortunate one, guys. It missed our sell limit. There's nothing we can do about that. Or not our sell limit, but our sell alert. There's just nothing we can do, you know? It is what it is. We got greedy on our entry. And the market will move without you. Thoughts on NZD Swiss? Let's go look at where NZD Swiss is in its cycle. Oh man. So what's the question? Does the weekly OB hold? That's what the question is here? is this the weekly open? No. Oh, that's a 1 hour chart. What am I talking about? Yeah, this cycle has to get dragged out, guys. Drug out. It's too early in the cycle to be making any sort of idea on this. Yeah, we'll have to put this on our watch list. I don't see anything specific. This is just in a phase B environment. And you know we expect phase B to be kind of choppy. ST, and this is what? ST phase B. So yeah, I mean at this point, like we're looking for like a potential up thrust, and then so the key to this is gonna live inside of whatever the up thrust happens. Again, you guys know in phase B we just have to monitor the relationship between price action and effort. And by monitoring that price action versus effort, we'll be able to like actually dictate where this might go. Now it's sitting in a weekly OB, which is very interesting because you would maybe want to assume buys, but until the data on the lower time frame show me this is very phase B, and I do expect this just to kind of play the range of the bounds of the range. So I mean, like this is grabbing a little bit of liquidity here into a demand candle. So yeah, we probably push up to the UT. So if that's the trade you're looking for, cool. But it's more about what happens up here in terms of the buying activity. And then based off what happens there, and then the next pullback, again, if it all depends on the effort, right? It all depends on the effort. So I would expect a UT and then maybe either absorption or a spring. And then pending what happens there, then you can, you know, build out your case. But right now it would be anybody's guess on what's actually happening. Because although you're seeing, again, look, although you're seeing decreasing selling activity, you know, there's no increase in buying activity to give you accumulation, and then there's also no, you know, very obvious push to the upside on low effort that would, you know, give you the redistribution idea. So this is just like an incomplete range. Again, you could maybe assume accumulation because of the weekly order block, but that's just not, like, you don't want to just base your idea off of that. So this is what I actually put on my watch list, bro. Ask me about this again on like Tuesday's live trading session. If you ask me on Tuesday's live trading session, we'll probably have a better idea of where this is going, but I'm not going to make assumptions based off something, one, that I don't trade, and two, that's just not giving me enough data. So this might actually be a really nice setup for later in the week once we have that data. But we need phase B to come to an end. We need to enter into some sort of phase C environment, and then we can take advantage of the future effort of the range. You said potential sell again at 62. I don't. There's just too much imbalance in there, bro. Again, like, what are you playing here? What are you? What's? Is there a lone candle there? Yeah, what are you, like, there's nothing in there. Like, what are you trying to trade off of in here? There ain't nothing here. There's literally nothing here. There's just a straight down, in your face fucking sell candle. So there's nothing there. You need more data. You need more data. Not expecting much in U.S. markets for Juneteenth. Yeah, I mean, shout out Juneteenth. I think this is like the second year in a row that the U.S. is, you know, actually seeing it as a holiday. So shout out to everybody celebrating Juneteenth. Big day in American history. You know, even though it has its roots in things that the country definitely, you know, the darker side of, you know, history there. But 2 years passed before, you know, the final slaves were, you know, basically, you know, let free when they should have already been let free. So great holiday to have. I don't think it'll affect markets too much, to be real with you. I can't remember if last year if it had an effect on the actual markets. I don't think Is it recognized as like an actual bank holiday, like in the sense that the banks are closed? I'm not even sure. Again, this is the only second time we're recognizing it, so I don't remember if the banks were actually shut for operation on Monday. Usually it says bank holiday rather than just holiday. But maybe they are. Maybe they are. Yeah, I wouldn't expect too much, maybe. But seeing as it's the only second time that we've, you know, recognized it as a country, I actually honestly truly forget what happened last year. Cool. I think that is everything, family. I think we have went over all the pairs in the chats. Yeah, the bank I work at is closed tomorrow. Okay, yeah, good to know. Okay, good to know. Yeah, well, I honestly wasn't sure. I did not remember from last year. So yeah, we do. I guess we do have that bank holiday tomorrow then. I was hoping we got like a UTAD and sell from there. You can't have a UTAD, bro, in phase B. You don't even have a UT yet. How are you gonna have a UTAD? You're not gonna have an upthrust after distribution without an upthrust. You need some sort of... And again, this is the problem 90% of new Wyckoff traders have. 90% of you guys force the completion of a range. You look at every range as if it's already done, or as if every range as if it's just ready to spring. And that's just not... This is not how it works. You have to wait until data shows you. This is why there's a question mark. I mean, could it form a UTAD? Yeah, maybe, but based off everything I know about range trading, this is still plenty into phase B. You know, you probably... I mean, I could have just moved that way over, but... like, you don't even have a secondary test to the high. Like, you just... don't rush the range. Don't rush the range. You'll know the UTAD when you see it. There's no reason to just assume one and put a sell limit, because if that doesn't act as a... If this pushes up with higher volume, bro, you're just going to get liquidated in no time, because there's nothing but imbalance here. So if it does push up that high, and it has buying activity, bro, it's going to get instantly liquidated, because you're playing some sort of assumption. We don't... I mean, we make assumptions, but we don't just put sell limits and just assume that the market is just going to fall because you want there to be a UTAD. That's not how that works, right? In order to have a UTAD, you still need things like a sign of weakness. Where's your sign of weakness? Do you have a sign of weakness? Is there a sign of weakness in here? Where do you see your sign of weakness? Right, you see how there's not enough data to support your UTAD already? So don't jump the gun, brother. Don't jump the gun. Have patience with it. Yeah, it's a federal holiday to my understanding. USPS is closed and such. Okay, yeah, cool. Alright, so tomorrow will be dead. That being said, guys, probably no reason to wake up early tomorrow. To be real, don't expect much from me in the mornings. But listen, family, that's all I got. If you guys want, again, to hop in the live trading sessions with us and actually execute off of these ideas that you guys seen today, you know, feel free to hop into the inner circle. We'll be happy to have you guys. You're more than welcome to ask anybody that's already in the chat that's active, you know, what they think about it, their opinions, what kind of stuff they're seeing from that. Because again, don't take my word for it, take other people's word for it, even though we didn't do much trading last week. But listen, family, I love and appreciate y'all. As always, I will see you guys later in the week. This is me, this is Skag, signing out and wishing you guys one last time a very happy Father's Day. That being said, family, I will see you later.